We're going to continue our coverage of this irrigation disaster in today's market segment with North Dakota State University crop economist, Dr. Frayne Olson. We've got some other topics we want to get to as well. And Frayne, we just heard Bill say the canal collapse is impacting over 100,000 acres of farmland. Do you have any insight as to what that might mean for the market and the decisions those producers need to make?
Well, from an overall global marketing standpoint, it's probably not going to have a huge impact on futures market prices. The more challenge will be what's going to happen locally. And again, not knowing the exact split by crop, I suspect there's going to be, because it's irrigated, will be a lot of corn, maybe some soybeans, some alfalfa. Again, on the futures market side, it probably won't have a huge impact, but locally it will, which really means that there's going to be an impact or adjustment in the basis levels. Now, the other thing we need to think about is how much will the basis adjust, and that adjustment typically depends upon how large an area has been impacted. From my indications from talking to folks in Nebraska, it sounds like over a large portion of the state, the corn and soybean crop, even though it's a bit delayed, really does look very good. I know there's pockets where it does not, but in general, the crop in Nebraska is looking very good. So in particular, a lot of the grain supply, whether it be, again, corn, soybeans, or alfalfa, will likely be shipped in to backfill what the area losses are. So again, we can make an estimate based on transportation costs what those basis level shifts may be. Again, the challenge will be, how do we try and put a marketing plan together given the lower bushels? And again, that's going to be very, very different across each of the different farmers that are being impacted.
All right, I love that breakdown. So moving on, we've also got information regarding the Market Facilitation Program payments. That information was released. Could you give us a quick refresher on MFP and tell us the important things to remember from this latest announcement?
All right, very good. So the first is the enrollment is now officially open. And what you can do is you can go to farmers.gov to get information about the structure of the MFP program. There's also a downloadable PDF that you can apply for it. You can go to your local FSA office, or you can apply online or use the downloadable forms. The calculations for each of the county payments have already been made. And again, if you go to that farmers.gov, you can click on the link. Now, when you take that acreage and you try and figure out, well, if you make a rough estimate of what's my payment going to be, for all of the covered commodities, for all of the covered crops, you'll get that same rate. So let's say it's $30 an acre in the total payment for your county. You take all of the covered commodities, all of the acres for the crops that you have planted, times that $30, that is the estimate for the total payment. 50% of that will be received in August. So 50% upfront will be received in August. The minimum payment that you will receive in August will be $15 per acre. The other two payments, so the other 50%, will be spread over two additional payments, one in November, one in January. Those payments are not guaranteed, so we'll have to wait to see if the trade agreements are not in place, if there continues to be depressed prices, you will receive these sequential payments. But if we get an agreement relatively quickly and the prices rebound, you may not be allowed to receive those second payments. So the second half of that, the other two payments, one in November, one in January, are optional. So we'll have to wait to see whether those payments are made. The main thing is that to understand that you need to apply for this, you have to fill out the forms, you make sure that your application gets in, and that when you look at that payment rate, 50% of it will come in August, and the other 50% will be optional payments later on in the season.
All right, very good. And Frayne, wheat harvest, that's another big story. And how's that looking, and what are some of the hurdles producers are facing in the market? Any advice for them?
Well, wheat harvest is progressing relatively smoothly. It looks as though Kansas is pretty much finished up. It looks like Colorado is about 75% harvested. Nebraska wheat is about 50% harvested, give or take a little bit. So we're making some progress. When we look at the crop quality samples that are coming in, average protein levels are a little bit lower than what we saw last year, and test weights are also a little bit lower than last year. Yields are quite variable. I know there's areas that are having some really very, very good yield potential. There's some areas that have had some disease pressure where, again, bringing down the test weights and the yields are not as good as we had hoped. The biggest challenge, I think, when talking to at least the wheat farmers up here in North Dakota is the concern and frustration with the base price. One of the things that I'm watching for specifically in the wheat market is if we start getting some significant rallies in the corn crop or corn prices, the wheat price will have to stay at a premium to corn to prevent it from ending up in the feed pile. And again, we don't want to take that high quality wheat that's typically used for wheat milling and suddenly have to shift it into the feed pile. So as I see it, when prices for corn are low, wheat does its own thing, but as corn prices come up, then all of a sudden the wheat price is also in fact impacted more heavily by corn. So I'm telling the farmers up here, look for some sparks in the corn market that, in my opinion, will be some very good pricing opportunities for wheat as well.
Yeah, lots of tie-in between those two crops for sure. And let's move on to soybeans real quick. What do we need to know here as far as pricing, the market outlook, trade updates, anything you want to tell us?
Yeah, so when we look at the corn and soybean market, right now we're kind of in this lull. August 12th, we're going to get an update or a resurvey of the USDA acreage numbers. We'll also get some better estimates of what prevented planting will be. So a lot of times right now we're kind of in this funny phase where we don't have a real good handle on planted acreage, which we'll get on August 12th. And we're also in this relatively mundane weather conditions. It looks as though weather is going to be fairly favorable for crop development. Even though our crop condition ratings are not as good as last year, they seem to have stabilized. Now, in my opinion, I'm much more concerned about the crop development than I am about crop condition. So the concerns about crop development, about potential frost damage, even if we have normal frost time period, what does that mean for drying costs? What does that mean for yield? What does that mean for test weight? Those are all going to be concerns as we get later into the season. I do think corn prices will be much more variable than soybean prices simply because we have such large carryover stocks of soybeans from last year.
Got it. And finally, Frayne, let's end it today by getting some strategies and ways to manage any risk on corn, soybeans, and wheat. If there's anything at all there you'd like to tell us. Yeah,
the core thing I'm trying to get across to the farmers that I'm talking to is we're going to see extremely volatile prices as we move into the mid part of August and first part of September. And so I think there will be some pricing opportunities, but they're going to be very, very short-lived. We're not going to see this large ramp up in prices. We're going to see a lot of price volatility. And trying to set prices or trying to market crop in that kind of an environment is very difficult. My recommendation is to try and pick some pricing points and put orders in ahead of time. Work with your local elevator, work with a broker, put the pricing points in saying if the cash price or futures price reaches a certain point, try and make some sales at this point and have those sales booked in advance. So let the market come to you instead of trying to chase the market, because typically farmers are not fast enough to chase the market. It just responds too quickly.